Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Joshua Pardue. He is a commercial real estate developer, advisor, and educator who has completed over $1 billion in transactions for his clients, in addition to developing $250 million in real estate projects. Prior to founding his current customers, Joshua held executive roles at both PricewaterhouseCoopers and Colliers International, and his firm acquired distressed commercial properties in the downturn, ranging from cold storage facilities in South Florida to a 200-acre residential project in Northport, Florida. And currently his firm has projects in more than a dozen metros throughout the United States. So, Joshua, thank you so much for coming on the show today.
Absolutely, Charles. Thank you for having me.
So I touched on your background a little bit, but if you don't mind kind of digging down a little bit more into kind of what got you personally and professionally into what you're doing now in real estate.
Yeah, when I was studying finance, I thought I was going to go the more traditional finance path. And then I started renovating houses and looking at cash on cash and realized this is a metric that was real and quantifiable versus some of the other stocks and other investment strategies. And then when I was done with undergrad, shifted over to the commercial focus, brokering deals with a firm called Colliers International, moved to New York. Started a different company that rose debt and equity for development projects nationally, and then handled the back end sales after they were stabilized. And while building that business, the recession had hit. I was splitting time between New York and Florida, and then so started a firm based out of Tampa that was just buying distressed assets from banks while they're down 50%. In that time, it was very scary for several years. And then kind of, fast forward another decade, and we're now doing corporate build-to-suits, some land development, and then some urban infill. Nice mix throughout the state and the country.
So when you went through the GFC, that was something you're buying these distressed assets. And one thing, I bought my first property in 2006 and another one in 2008, another one in 2009. And what I realized was that it was very difficult at the end of that, you know what I mean? Those first 3 years of my investing career, those very difficult to get funding and financing. How are you funding these deals during that time?
Yeah, great question. On quick close assets with the banks, we were raising physician, high net worth, individual, private dollars. When you're doing deals like that, it's a lot of trust. Trust your sponsor, trust your investors, because when you're getting into it. And then we typically close all cash within a couple of weeks with the bank deals. And then your word is really your bond. And then during that time, any time in business, we would, if you tell someone you're going to get something done, the banker relies on you. If you get it done, great. They want to show you and do other deals with you, but it's important that you make the right decision, commit to it, and execute.
Yeah, it was crazy when banks were giving I got some term sheets that were saying 15% loan to cost on something I'd already renovated, fully rented out. I had some private lenders saying they'd lend me half of the appraised value. It was crazy.
Yeah, some of the private lenders still like 50% loan to cost or loan to value. Those are on unique situations, and really land deals as well.
Yeah, it was. It was crazy. Yeah, it was amazing. It must have been like 25% loan to value they were doing or something, because how it was done in Connecticut where I was buying these. But anyway, getting back to you, what you're doing. So kind of what drove you from what you were doing there into commercial development?
I've always enjoyed, I remember growing up playing with Legos, watching cranes. I always appreciated the infrastructure. But, a lot of people, including myself, didn't understand how does development actually come together. And I kind of went on this mission to self-educate and to work with people that knew what they were doing, smart, in a lot of different capacities, and learn from these different people while executing projects. And then, when you're helping other projects that you support, and then you're running your own, and you're kind of running that down the line. That's when I knew this is something that I really enjoy, that's unique and adds value. And I don't think AI is going to replace it in our lifetime.
Oh. So you have a few different companies that you work with that you own right now. Can you give us an overview of your businesses and kind of what your current investment strategy is?
Yeah, the primary operating company is called GI327 Redevelopment. jpredev.com if you want to check out the projects. And that business is roughly a third national kind of corporate build-to-suits. So think of one tenant, one lease, one parcel, building based on just what that business needs. You agree up front on 20,000 square feet with this type of development plan, find the land, build it, then they occupy it. The second main strategy is some of the old distressed assets from the downturn. We're still working through developing those, and that creates a variety of different development projects, ranging from mixed use, residential, retail. We did a storage project. We did cold storage. When you're buying the land, then figure out the development plan later. It's a little different. That first scenario is a custom build to suit. Second scenario is the opposite. You bought the land right and figure out what the highest and best plan is for it. And then the third scenario is my passion and kind of where we're going in the future, which is really urban infill and kind of adaptive reuse and making downtown cores, urban cores of Florida cities great. And I believe there's a big opportunity there you look at some of these cities in the Northeast and throughout the country, and then you look at some of the Florida cities, and there's a big opportunity to urbanize and work on those projects, and that's something we very much enjoy. We're very heavily invested right now in downtown Jacksonville, downtown Tampa. We have a few projects in downtown Miami and Fort Lauderdale, a few projects downtown Orlando, and I really enjoy that as a born Floridian. I enjoy working on those types of projects, but that urban historical. We're converting churches, converting old buildings into new mixed use projects. It's a lot of fun.
Are you guys down in like Ybor? Is that where you're doing it down in Tampa?
Yeah, we just actually closed on two properties in Ybor last week, and we've already got the crew in there renovating older buildings and making them nice again. And then we're supporting on a lot of other, from a variety of smaller projects that we're the lead on through. There's the Gatchers project, which is getting a lot of media attention as a 50-acre project, one of the largest projects really in the country, and from an urban core perspective of converting the land between Ybor City and Channel District into a master plan mixed use community, which is really cool. I could send you some of the slides from that if you'd like to show it to the audience.
Yeah, the Ybor, when I lived over in St. Pete, 2017 to 2021 or so, I loved Ybor. I thought it was, when I make it down there, I thought it was such a cool old Tampa type, you know what I mean? And there's so much potential there. And it's awesome that you guys are working on this and kind of revitalizing. That's the one thing, moving from down here, 2012 from Connecticut. Connecticut has some wealthy areas, but we also have some areas that were kind of hit by changes in manufacturing many decades ago. And you go to these places too, and it's kind of beautiful buildings that haven't been taken care of. There's people that moved out that had money there and stuff, whatever. So you're right. It is a definitely something that's a very unique niche. One of the things when you said the word historic, which would scare me almost as an investor, unless you were with someone that really knew what they were doing, which is you. But how do you navigate like all these different municipalities and historic districts as you're nodding your head? So you know this.
Yeah, it's historic. I had an architect tell me early on that historic and adaptive reuse, those are passion projects. What do you mean they're passion projects? Well, there's easier ways to make money in development and the rich, and sometimes they're often break even. And yes, and yes. There's always a bunch of unknowns. There's several extra layers of bureaucracy and whatnot. But on the flip side, when you look at a 100-year-old building and you realize that you just made it, we just completed one. It was built in, I think, 1911. And I think with what we did, it was really bad. The roof was about to collapse in. These historic windows were about to collapse in. There's water coming in the basement. Now it's all dried in, as we call it. New roof, new window, fixed windows. We had to restore the windows. New HVAC, all the moisture's out. Based on the 18-inch block, it'll probably last another 100 years without another major, some maintenance. But potentially that building could last 500 years, or more. If you go to Europe, some of those structures are 1,500 to 2,000 years old plus. So it is rewarding to work on the historic structures.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com.
How do you usually see the communities accept kind of the projects that you're bringing in? Do you have problems with any, maybe the boards? I would imagine the people living in those areas welcome it. There's more better conditioned housing there. No one's ever really complained about that per se. But how do you see when you're going to zoning boards and local municipalities, working with them? Are they pretty open to these ideas that you bring to them?
It's a mixed bag. Some that are informed and that you'll have a relationship and they know what they're talking about very much will often support what you're doing. Others that have less information, it's very easy for them to criticize and complain. All things Dale Carnegie says not to do. Criticize, and complain. You get a lot of that. And so I think that the key is just take it in stride, staying a smile, and understanding it's misinformation, and then just explaining it with passion and energy, and recognizing that you're not going to make everybody happy. But as a whole, we're very big on balanced development approach, which means recognizing, appreciating the historic. We're not trying to tear these structures down by any means. We're trying to bring them back to glory or make additions that make them economically viable. And so right now in Jacksonville, there's old, it's called Springfield Boss. That's what we call the project. It was an old Jewish center, and then it's a Jobs Corp building, a federal building. Went dark in the 80s. It's been dark, So you got basically a block and a historic shell, and the rest is decrepit. And we're looking to convert that into 78 apartments and 10,000 square feet of ground floor retail. And it's such a challenging project that the city is going to have to co-invest a little bit with us and provide different incentives, because the cost of improving it is higher than the value based on the net operating income at a market cap rate. So you're like, okay, why am I going to spend 10 years? We've been working on it for 10 years, 10 more years, 5 years, 2 years, 3 years, building it out, stabilizing it, and then owning it. But the idea is that in 5, 10 years, these markets will have come up. And the numbers won't be the same, but you got to be able to get it to there is the key.
Yeah, I imagine it's convincing them too, because if you have 70, 80 apartments, that's housing for almost 200 people. And there's probably a dozen jobs plus, depending on the size of it, for that retail there. So, all these things I think politicians don't really see, you know what I mean? And you got to show it to them, like you said.
It's very manual and very hands-on. There's no replacing the human relationship and talking folks through it.
Before we move on, I had one question, because one more with this is that I've had some successful developers on the show before in commercial, whether they're doing malls or strip malls through different areas. And one thing I kind of found is like a recurring theme was that they would partner with someone locally to, I don't want to say push deals through, but to assist them with getting deals to the finish line. Have you ever done that? Is this something that maybe you do once in a while when it's required?
Yeah, there's a lot of that. The thing about development is every LLC form and every deal or project is different, depending. Sometimes someone's contributing the land. Other times you're buying it. Sometimes you need local partners. Other times your local partners are the GC and the architect and the engineer. Sometimes you actually want a local operating partner. Depends on your role. With 80% of what we do, we're the lead or the operating partner, whether it's local or not. But if we are traveling across the country, normally it's going to have a deal with a credit tenant that says that, hey, once you get this thing open, we're going to lease it. We're not typically taking on a lot of multi-tenant deals outside of the state that have more variability unless there's partners. Yeah.
Yeah, that's probably the best. And then you would sell that property usually off after it's finished, tenanted?
Everyone has their own thing. Some folks never sell. Some folks sell everything. Some folks are opportunistic and situational. To date, we haven't sold off a lot. We've elected to own and manage and control and kind of grow on those assets. But each situation is different.
I don't know what tenancies are, but for example, I guess if it was like a CVS, it was a single, tenant building, that's not going to require much assistance or work on your part for a triple net lease.
Yeah, I mean, once it's up and running, that's the benefit of the triple net lease. We just left the call with Chipotle earlier today. We're looking at sites for them out west and helping them out. And right, once you find the land and control it and build the building, a lot of the rest they're doing on site, controlling their own property, because that is their business model.
So skirting a little bit from that, because if you already have a tenant lined up, you're working with them, you already know what the kind of, I guess, exit strategy is going to be, or whatever. The thing is that we saw with a lot of people that are developing, let's just say multifamily over the last few years that came online, and they were having issues because markets changed, a lot of new product on the market, interest rates went up, huge thing. I mean, as a developer, you're taking on a lot of risk. And with commercial development, it's not like building a house that's going to be done in a few months. We're talking 2 to 3 years in most cases, right? I would imagine from the beginning to the end. How do you kind of minimize your downside, let's just say, protect yourself from any uncertainty in market conditions, between that time of beginning to completion?
Yeah, there's a reason why when things go bad, equity gets hit first, debt gets hit second, is the way I'd say it. You can never completely insulate from that. But what you can do is you can be smart about each LLC and each investment. For example, we only use higher leverage if there's a known income stream tied to the back, a credit tenant lease, for example. If we're going to do something that doesn't have that much assurance, we're going to bring more equity to the table and have a lower loan and stronger partners. And then it comes down to deal size and scope, and not biting off too much to where you spread yourself thin. And there's a lot of ways to look at it, but you're looking at the LLC and the business plan level, and you have to look at how does that project and piece fit into everything else that we're doing. You never want any one piece to be able to systematically poison the rest of what you're working on, for example. And so balancing that out is really important. And I'd say that's why a portion of our business is land, or the riskiest, most speculative. A portion of our business is the single tenant build to suits, which is known to be more stable. And then there's other middle of the range forms of development in between also. And you're balancing it all out, because sometimes the cash flow from your income properties are helping carry the costs, the land and other assets.
Yeah, the build-to-suit is a great business because you already have that lined up, like you said, and the risk is obviously minimal or less than, like you're saying, buying land and going that direction. How does that conversation usually work? Are you finding maybe potential sites, or is someone from your firm in contact with these different national players that say, hey, do you want to expand to XYZ, whatever it might be? How does that usually kind of go, that dialogue?
It depends on the size of the tenant's business. If it's a smaller business, you're dealing with a few decision makers. If it's a national retailer, there's going to be an assigned regional director of a state or with an area within a state, and it's their sole job to identify new markets to expand into. And so the line that I like to share with people is, when you're in that discussion with a real estate director that needs to open stores, you don't ask for the low-hanging fruit. You ask, what is the challenging problem that I can solve for your business? What do you mean? Mm-hmm. What is the market that you've had an issue with? What's a problem that you haven't been able to solve? And then by asking for it, you're starting the spirit of the relationship on the right foot by saying, like, I'm not just another guy here to make money. Like, I want to actually help you and put the client first and deliver that value up front and keep going back to that. And if you keep focusing on delivering value and just recognizing I got to create value for my stakeholders, I'm going to capture a piece. It's very easy for the market to allow you to capture a piece as long as you're creating value for others. And that's the best way to think about it. So in that scenario, we'll ask for what markets have had a hard time, and then we'll go out and find the land, put it under contract. Sometimes the solutions aren't readily apparent. So you have to dig deep, talk to off-market landowners, and contact the attorneys, the brokers, the civil engineer, get all these people working in order to come up with a viable development plan. So like an example of a site plan for a tenant, and you take that to the tenant along with some rent estimates. And if you listen to them and you did it right, they're excited, they want to move forward with a lease. Once you solve that first couple problems, that's how you build the relationship. Because of course, there's a lot of people that want to do development for these great organizations.
Yeah. And I imagine that puts you ahead of all their pretty much competitors in that market because they're just looking for the easy deal that they can just kind of connect, be done with it, So what would you say, Joshua, for people, maybe advice for someone that wants to enter the world of commercial real estate investing or developing? What would you say, like get in on the brokerage side, work with one of those firms beforehand? What would you suggest for someone like that?
How can I help you? How can I add value? How can I get involved? Questions like that show that you want to put in work and you want to help and you want to learn along the way are by far the most important. Whether you're a broker or a developer, you're still in theory doing a similar thing. Brokers charge a fee for adding a little bit of value. Developers get a bigger piece of the ownership for adding a lot more value and taking a lot more risk. But at the end of the day, if you approach it with a servant leadership mindset, where you're there to add value for others and help, regardless if you're on the advisory side or if you're on the development side, focus on that. And, I'll say 10 and 20% of our business is still advisory because sometimes we're working with the intention of doing a development project and we'll learn. For example, we have a medical client that 7 or 8 out of 10 deals we'll develop for them. But a couple of times I'll fly in there and I have the team finding sites in advance. We'll find a building that's for lease and it's not for sale and it'll work for the client. And instead of trying to force a deal that's not there, I'll just tell my client, hey, it's in your best interest to lease this building. Oh, but you don't own it. You don't get to develop it. It's fine. Pigs get fed, hogs get slaughtered. Get the deal done. You take a little brokerage fee. You solve the problem, but you focus on the relationship. And if you do that consistently, what the marketplace rewards that because a lot of people don't focus on the relationship.
Yeah, it's a lot of it's in business in general, it's just kind of like one and done. And then if you see something like that where you're ready to write a bigger check and someone tells you you can write a smaller check, then your trust level goes up with them, no matter what it is, from getting your car fixed to what you're, building a commercial property. I feel that it is, that trust is just, that relationship is just made so much stronger.
To that advice to your audience, there's a really good saying that I heard recently that's I make long-term investments with long-term people because long range is where the gains are. And it's the point that when you're working on things, if you're transactional, it's even if you do get it done, you didn't service the relationship. And it's 10 times harder to go get a new customer than keep a customer. So instead, just paradoxically change your mind away from hustle culture. Focus on this person. First, they call it the go, no go checklist. Does this person do business in the category they're looking to do business? Yes. Do they have a need? Do they have the ability to conduct? All those common sense business questions. But the other half of that checklist, do you have rapport? Do you have trust? Do you have respect? Do you like the person? Does the person like you? Does the person want to see you and your business succeed? Is one of the most underestimated questions out there of asking yourself. I normally know the people that I will work with and work for, they would genuinely be excited about seeing us succeed and make money. And if you have any doubt of that, that's one of the things I've learned over the years. That's where you want to shy away. If your instinct isn't great about the person, forget if it makes money and you like the project or it's a good opportunity. You have to feel good about the person because in my experience, it doesn't turn out great, even if the rest of the deal makes sense. So with that said, if you focus on the lifetime relationship and then X months in, you get to a scenario where you can make more or less money on something. If you make the lifetime relationship focused decision, the market will reward you. Maybe it'll cost you a little bit right then, but in the long run, you'll have a real relationship. And those are rare. It surprises me sometimes how short-sighted, very smart people are and litigious and people are. But if you focus on that long-range value, the folks you want to work with, the winners, that they see that and they want to align with you.
And also, I found in commercial real estate through syndication, whatever it might be. I mean, you're in these partnerships. These are not short-term things. I mean, these are 3, 5, 7+ years that you're with someone in business. That's a lot of conversations you have to have. And if you don't connect with that person or those people, it becomes a very difficult way of doing it, especially with your money, investors' money, and all these different conversations that you need to have to make sure a project is successful. So there's a lot of great information there.
We've done syndication deals before. And you offer them, hey, we're done. You want your money back? And they say, no, we'd like to do something else with you. Keep the money. Like, all right, that's the best. That's the best compliment.
Yeah, that's fantastic. Yeah, definitely. When someone rolls the money into the next deal, that's a fantastic. That's better than any review they could ever give you. You know what I mean? So this is a pretty general question for all the different kind of parts of real estate that you've been involved in or are involved with currently. But what would be some common mistakes you see real estate investors make? And this can be in development. This can be just in investing. Could it be anything that comes to the top of your head that you've seen before over the last couple decades of what you're doing?
I really like going back to the long range gains perspective. People focus on the hustle culture and Bitcoin jumping up and down and focusing on stock trades and the algorithm and that. That is a way to do it. I suppose it's better to be doing that than doing nothing. But I'd say it's far superior to lay out, like, where do I want to go with my life? How do I want my business to go there? And look as far out to the future as you can. Take care of yourself, take care of your relationships, take care of your team, and approach it that way. And the longer out you can go and you can look and you can be patient for, the larger, better opportunities you can get. If you need to get a deal done in a week or two to make some money, maybe you're a recruiter calling to place a job, okay? If you want your money in 6 months, maybe you're a broker trying to get a deal done. If you're willing to wait 6 years, maybe you're a developer. If you're willing to wait 10 years, maybe you're a fund manager, right? The market rewards people that are patient and willing to wait for their return on time and investment.
Yeah, that's a lot of great information there, especially in this culture that we're in now, where everybody needs everything immediately. It knows that sometimes good things take time. So, Joshua, when I was in preparation for this episode, I was looking at, you have a ton of different education material. How can listeners learn more about you, your business, and if you want to give us like a little overview of what you've got going on with your educational piece, your training piece of your business?
Yeah, absolutely, Charles. And to that point, when I started, it's funny, I was in New York raising money for a business 10, 15 years ago. I started doing these YouTube videos. The company said, oh, no, you can't use our logo and do this and do that. I'm like, I was pretty sure you guys are missing the bus. Like, this is a good idea. It's good for the company and for me. I had to take those YouTube videos down, teaching people how to invest in at least projects. And it was a little discouraging. I took off my 30s from dealing with social media where I wasn't even going on my social medias. And then about 2 or 3 years ago, I was deciding to do some case studies on current projects. And then I have this growing audience of young team members and ranging from analysts, associates, interns, colleagues that I'm working with that I'm enjoying mentoring and coaching and watching their development. And it went from kind of there to, hey, let's record some of this stuff. And I'd get jokes like I'd said, like, the pigs get fed, hogs get slaughtered. Like those lines are gold, sort of thing. And then so to date, we've just recorded a bunch of different things ranging from project case studies to mindset to the actual technical skills about development and finance that you'll find on our YouTube, the Joshua Pardue YouTube. And then there's also the other platforms, the Instagram, the TikTok, and YouTube Shorts, where it's a little bit more of the sound bites. At this point, we've had a fair number of people reaching out and asking about, hey, are there mastermind calls or one-on-one coaching? And to date, we haven't launched any of that. I've just been helping people for free that kind of reach out, spend a little bit of time. I like pointing people in the right direction. It feels good in life. But ultimately, we're aggregating that, and we will do some form of a program, depending on whether it's choosing 10 people and getting really deep with them, or doing something that's a lot broader. But in the interim, we're putting out material under the Joshua Pardue, under my name, under the different channels for free, just to help people learn and grow. And you said it earlier, the idea is, it's like a little bit anti-hustle culture. I see these young people with the photos in front of the cars and stuff like that. And you realize, like, wow, a lot of America is paying attention to this and is focusing on this. And this is actually the worst possible advice you could give people, which is to create short, instant gratification needs, because that's not actually how America works. America is amazing. It can bless anyone. I tell people all the time, I came from a welfare house, a single mother, where I was on food stamps. I was mowing lawns in middle school. I set up fish tanks as a kid, doing anything to make money. And so if I can grow a business in this country, then really pretty much anyone that's in America, I'll categorically say it like that, can, if they're willing to do it. But you can't be looking for how do I hustle something in 2 days or 30 days or something like that. It's a long-term commitment.
Yeah. After 2 decades as a entrepreneur, I've realized that everything's more difficult than you think, and it takes a lot longer than you think. But and it's more competitive. I mean, everybody's out there doing their own different thing. It couldn't be more competitive today. So the people get rewarded that are going to have that focus and really that drive in one direction. And if you start kind of skirting different ways, you're going to find yourself not really down any of them, as I found over the years.
It is challenging, and I struggle with that too. There's a lot of opportunity out there in finding your focus. But one line that I think is really valuable, people overestimate what they can achieve in a 12-month period, but they underestimate what they can achieve in 5 to 10 years. But you have to be passionate, be right about, and stick with it, whatever that is.
Joshua, thank you so much. We'll put those links into the show notes. If there's anything else you want to share, if not, thank you so much for coming on today and looking forward to connecting with you again.
Thanks a lot, Charles. I appreciate you having me.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.